Hi there everyone, you've tuned in to Buy Now Sell Now weekend edition right here on ET Now, and I'm Karunya Rao, and the stocks that we'll be talking about today will be BEL and Everready Industries, and we will also discuss Anil Bhatt's portfolio within the course of the show. Joining us on the show then are our guests G. Chokkalingam from Economics Research and Advisory, who joins us, and we also have Rahul Randeria from IFCI Financial, who's joining us on the technical side. So let's get on with the show and take on board our first query, which is from Ajay Kumar Dua from Bombay. Ajay Kumar has emailed to us and he has purchased the stocks of BEL at a price point of 185 rupees a share. He says now that he can hold on to it for about 3 years, and he asks whether he should hold on to it or quit. Mr. Chokkalingam, I'd like to start with your view. What fundamentally speaking, how does this stock look to you?
No, it's a great company, no doubt about it, strong balance sheet, but the stock has already played out in a very big way. So in the short term, you would get upside of a very limited one. Target price is around 201. If he is willing to hold for 3 years, he can hold it. Probably he can get in 3 years time a compounded return of around 10%, provided the market is normal.
Okay, and Rahul, what is your view? Our viewer here has made some decent amount of gains on this particular share. As of now, he entered the counter at a price point of 185. But from a 3 years perspective, what would be your advice?
Yeah, if you look at the overall chart since 2015, the stock has been making higher tops, higher bottoms on the daily charts. And recently, if you look at last 3 months of charts, it has formed a rounding bottom formation. The stock is on the verge of a breakout of a lifetime high. So the momentum is positive in the stock, but at lifetime high, it will consolidate for some period of time. But in next 12 to 18 months, I feel that the stock has potential to test the level of 210, 220 odd levels. So if there is a pullback, if anybody is holding, one should hold it. If there is minor pullback, one should add on at the lower levels with a stop loss of 160. And I think that in next 12 to 18 months, stock can test the levels of 210, 220.
All right, there it is. Then your query, we hopefully have been able to address it. Both our experts here seem to be fairly optimistic on this particular stock. But moving away to our second query then, which is from V. Maruti Rao from Bangalore. He holds about 50 scrips of Everready Industries, which he bought at a price point of 298. Since the last 6 months, he has been holding it and wants to know if he should be holding it for a longer period. Just want to get in a perspective, Mr. Chokkalingam, from you. What are the prospects of the stock? Because this one has done fairly well as far as the earnings growth is concerned, barring the last quarter, which saw a one-time GST impact. The numbers that the company has been posting have been fairly steady. What's your view?
It is a good company done well. In fact, if you stretch beyond 3-4 years, it has already become a solid multi-bagger. But on FY17 earning, it's already trading at around 23 PE. And the raw material prices have gone up across the world. Metal prices have gone up. That should also be negative for battery producers. So I would suggest him to sell if there is any spot in the market and move to safer stock like L&T Infotech, which I believe is available at a rock bottom, can be a much safer stock than Everready Industries.
Okay, do you also share the view, Rahul, on Everready batteries? Because the viewer here is willing to hold on to it for a longer period of time.
Yeah, if we look at the overall charts since 2014, the stock has been highly volatile. The wild swings from 180, it goes to 420 again, it comes back to 180 again, it went to 373. So, the 180 levels is the multiple support area. From there, we have seen recently a very sharp 90-degree rally, and the stock is in the consolidation time and price correction now. I feel the stock has potential to test the levels of 420 in the long run. Definitely, the volumes are dry, but I think after a consolidation, the stock could pick up a momentum from the current levels. Definitely, in next 12 to 18 months, I feel the stock can test the levels of 373, and one should hold on with a stop loss of 240 on the downside.
Okay, so Maruti Rao, hopefully we've been able to address your query, while the technical expert does see some kind of potential from a long-term perspective. But fundamentally speaking, our expert is not too sure about that one. Hope we've been able to address all our viewer queries then, and it's a good time to slip into a quick break then, but don't go anywhere as we have lots more lined up on the other side. Welcome back. You're tuned in to Buy Now, Sell Now Weekend Edition, the one stop for all your queries. And let's move on in the show then and take a quick look at Anil Bhatt's portfolio. Well, he's a 30-year-old investor who mostly invests in various counters, mainly from a short-term point of view. And looking at his portfolio, well, 30 stocks he holds of Titan, which he bought at a price point of 541. So a decent amount of gains that he has clocked in for that one. Then there's Tata Global, 370 stocks of that one, which he entered at 171.5 odd rupees. There's Philips Carbon, 20 shares of that one, 591.6 rupees is where he entered the counter at. Petronet LNG, 40 stocks of that one, 215.6 is where he entered this counter. He bought about 10 shares of Maruti Suzuki at 7,634 rupees, 190 shares of Kirloskar Electrics for 52 rupees. Then there is 60 stocks of Kaveri Seed, which he entered at 544 rupees price point. There's 55 stocks of ITC that he's bought at 271. 20 stocks of GSPL at 184.2 rupees. Then there is 10 stocks of DHFL, which he also owns, which he entered at 436.9 rupees. Cochin Shipyard is also something that he has invested in, 30 stocks of that particular stock at 411 price point. And lastly, there is CDSL, 55 shares is what he owns of that particular counter, which he entered at 316.4. So this is what his current portfolio looks like. Mr. Chokalingam, I'd like you to come in on the portfolio here. Maybe the first three stocks is something that we can start with. Titan, he has bought it at 541 rupees a share. He has 30 stocks of that one. Then he has 370 stocks of Tata Global, which he bought at 171.5. Then there is Philips Carbon, 20 stocks of that one, which he entered at 591. So decent amount of gains he has made in all of these three counters. Fundamentally speaking, what is your view on these three?
You can certainly hold Tata Global and Philips Carbon. Tata Global, now we have seen a lot of initiative by Tata management to improve and restructure the group companies. Tata Global has underperformed for very long, but now it started picking up. I believe it has a potential to reach 200. Similarly, Philips Carbon has improved the productivity substantially and posted a decent or rather impressive performance. And also the company is expanding. So therefore, there is further upside. With a target price of 680, you can hold on to the stock. Titan Industry, no doubt, it's done phenomenally well in the last 10 years. But valuation is highly stretched. The current year earning, it is trading at around 55 PE for FY18. And even for 1 year forward, it is trading at around 44, 45 PE, which in my view is extremely stretched. Therefore, you can sell it and buy South Indian Bank. I firmly believe that South Indian Bank can give 25 to 30% return in a year's time, and it can beat Titan Industry in relative performance because it is the cheapest banking stock within the old private sector segment, trading at around 1.3 times adjusted book value. The business is more than a lakh crore and still able to grow the credit in double digit. So I expect a good amount of consolidation to happen in this segment. So therefore, I see opportunity for re-rating. Hence, you can make a switch to South Indian Bank. Just as a disclosure, we also personally invested in this stock.
Okay, so you continue to remain optimistic definitely on Tata Global. Then Philips Carbon is also something, but not a very bullish, not very good idea to hold on to Titan at this point of time is what you would like to say. And South Indian Bank is something that you would recommend looking at. Let's also take a look at the next three stocks that he holds in his portfolio. There's Petronet LNG, which he bought at 215 odd rupees. Then just a very small chunk in Maruti Suzuki, 10 stocks there at 7,634. Then there's Kirloskar Electric, 190 shares is what he's holding at, which he entered at 52.4 rupees per share. Barring Kirloskar Electric, I think he has made a fair amount of profits in this one as well, in these three stocks as well. What is your view about all of the three?
Yeah, you can definitely hold Petronet LNG and Maruti. In the short term, they have a marginal upside, but definitely in the long term, Maruti has got a good potential in a period of 2 to 3 years because it is able to continuously beat its rivals in improving the market share. However, Kirloskar Electric, I would suggest him to sell whenever there is any rally in such a small cap stock, because last 5 years it has made losses and there is no improvement at all. And second, even the balance sheet is giving a lot of concern. if you look at the debt, which is about 66% of the sales, and even receivable and inventories on the book is about 3/4 of annual sales. So these are the signs of very weak balance sheet. So therefore, I would suggest sell Kirloskar Electric and buy KCP Sugar. It's from excellent management, strong balance sheet, and most sugar companies have a lot of debt. This company has got least debt, and the stock also corrected around 31% from the peak, and it is the most efficient sugar company and also very high dividend yield. And this stock can definitely give even 40-45% return in 1 to 2 years time. Its assets are at a steep discount as compared to the enterprise value. So therefore, I would suggest this shift.
Okay, so shifting to KCP Sugars is what Mr. Chokkalingam would like to recommend, because anyway Kirloskar Electric hasn't seemed to have done much for the portfolio and for the shareholder. So yeah, Petronet and Maruti Suzuki in the meantime are something that you should retain at this point in time. Let's move on to the next three stocks in Anil Bhatt's portfolio then. Kaveri Seed, 60 stocks is what he is holding, 544 is the price point. ITC, 55 stocks there, he bought them at 271.4 rupees, and there's GCPL, 20 stocks, 184.2 rupees again. But clearly even in these three stocks, the investor seems to be making fair amount of monies. What is your view?
He should hold on to ITC and GSPL. I definitely find further scope for upside in these two stocks, but I would suggest sell Kaveri Seeds and buy Andhra Sugar. Kaveri Seed, it's a little scary in the sense not able to maintain the consistency in the performance last 2-3 years. Stock is also extremely volatile. Now it has run up a lot, so you can book profits and move to Andhra Sugar. Though the name is Andhra Sugar, it's a misnomer. 85% of the profits are coming from the chemical business for Andhra Sugar, and the stock is trading at around 7 PE on current year earning. It is one of the cheapest stocks in the mid cap space in the current bull market. It is engaged in industrial chemical and caustic soda. It is also asset rich company. It has got rich investments in 3 companies, namely Andhra Petro, Josil and Andhra Gas Power Corporation. For last 5 decades, it has been giving dividend consistently. Rich assets and balance sheet also very strong, least leveraged. And I am pretty confident that in 2 to 3 years, the stock can give a phenomenal return. So therefore, I would suggest this shift.
Okay, so a shift to Andhra Sugars is what you would recommend in place of Kaveri Seed. Okay, and moving on to the last leg of the portfolio, which is DHFL, 10 stocks of that one is what he's holding, 30 stocks of Cochin Shipyard, and CDSL, 55 stocks there. 2 are fairly recent entrants as far as the whole IPO market is concerned. They're fairly new kids on the block. What is your view on these? Because looking at the 3 stocks, these 3 have also given a decent amount of profits in a short span of time for the viewer.
Yeah, you can hold on CDSL and Cochin Shipyard. CDSL, it will give only marginal return in the short term because already it is priced in and valuations are stretched to over 30 PE for the current year. But in the long term, definitely CDSL can give a decent return in a period of 2 to 3 years, because the number of companies getting listed would expand in a big way. Even the number of investors participating in the stock market would keep rising. So in the long term, there is an opportunity. Cochin Shipyard, you must have got it from the IPO. I suggest him to add actually because it has got a strong balance sheet and a lot of orders the company has, and net cash company. And according to me, this is the company which is engaged in the defense business would get a lot more orders because of the recent international political environment. And also lastly, Cochin Shipyard has got a little more than 1/4 of the revenue coming from the repair segment, which is highly profitable. So therefore, I would suggest him to add. Dewan Housing, apparently it looks one of the cheapest housing finance companies, but on entire housing finance companies, I am quite negative. Therefore, I would suggest him to shift to Karnataka Bank. Because we have seen already 200 basis point fall in the benchmark interest rate, and the banks have dropped both the lending rate and deposit rates. So the banks have got access to cheap funds. So therefore, in the future, the competition for housing finance companies from the banking space would be very intense, and hence I suggest Karnataka Bank, which is available at around 1.2 times adjusted book value. It is the cheapest private sector bank, and it has got a business of around 1 lakh crore, and it is able to grow the credit in double digit when the entire banking industry is growing at around 6% year on year basis. Also, it has got a very good exposure to low cost deposits. So, therefore, I would suggest shifting from Dewan Housing to Karnataka Bank.
All right. So, this is the final leg of recommendations coming in from Mr. Chokkalingam, is they were holding on to both CDSL as well as Cochin Shipyard, but can consider swapping DHFL with Karnataka Bank is what he would like to recommend. But do note that the portfolio recommended here is a model portfolio, and we would request you to consult your individual investment advisor before making any investment decisions. And on that note, we'll slip into another quick break, but stay tuned as we have more wealth creation ideas and picks from on the other side of the break. Welcome back. You're still tuned into Buy Now, Sell Now Weekend Edition, and let's bring on board then both of our experts who've been with us on the show, Rahul Randeria as well as G. Chokkalingam. Well, on Friday we saw a very slow day. In fact, the markets even shut shop on a completely muted, completely flat note, despite all the volatility that we saw across throughout the week. In fact, possibly owing to a truncated week, all the investors must have fled to have a long weekend and actually celebrate the long weekend, is probably why we saw a lack of action in trade, especially on Friday. But Rahul, coming on this one, markets are completely trading flat right now, with only a few sectors really outperforming and, you know, really trying to pull up the markets, but not being able to do as much. But pharma has clearly seen a turnaround. What's your view on market as well as pharma as a space that and the performance it's showing right now?
Yeah, if you look at the daily charts in the Nifty, it has been moving in the process of making a running triangle, and these are the very highly volatile patterns, and it are very difficult to trade also. Now, if you look at the hourly chart, it has been moving very wild in the last week, and the coming week is expiry week, so more volatility could be seen. Now, if you look at the pattern, you know, I feel that Nifty can test the level of 9909 on the upside, and from there we could see again a pressure, because there is a trend line resistance on the Nifty and Nifty spot. So I feel that till expiry Nifty could trade sideways to downside. If you look at the pharma sector, from its lifetime high, from 14,000 it has corrected to 8,300 in the last 2 years. That is almost a 40% correction. And if you look at the recent setup in the last 1 month, it is just in the process of making a bottom. I feel that in next 12 to 18 months, a pharma sector can test the level of 10,000 levels. So definitely, if you look at the individual stocks, Dr. Reddy's, Sun Pharma, Lupin, Glenmark Pharma, any of the pharma stock which have corrected more than 50-60% are good stock at good levels to accumulate for the long term. Definitely one should keep a caution of 10%, cushion of 10% on downside, and slowly and gradually accumulate for the long term investment.
Right. So you seem to sound a bit optimistic about the turnaround that the pharma stocks have been showing off late. But Mr. Chokkalingam, what are the other sectors that one should look at? Because this is a market where we're completely clueless, and we just seem to be sort of imitating what is happening in the global markets and seem to be taking cues only entirely from the global markets. What are the key triggers right now, and what are the sectors that one should look at this point of time?
Unfortunately, I don't see any positive trigger in the short term. We are fully invested in the market, but we are prepared to see volatile market till October. Because Q1 results, all of us know the way it disappointed, and Q2 also is not going to be tremendous improvement. The GST impact is going to be there partly, and also on liquidity front, FIs are not coming in a big way, and in fact, so far in the current year, they invested more in debt rather than in equity. For the last few weeks, they have been pulling out of equity also. And third, you know, the overall market cap is somewhere around near 130 lakh crore if you look at all listed stocks. Whereas, you know, if there is any fear, even 1% of that come for selling, which is about $20 billion, and that kind of liquidity is not there in the system. Then you also have international political issues. So you have too many issues apart from in the industrial economy still struggling to recover. We have seen the IIP quite a bad condition. So of course the government is increasing the spending, which is visible from the deficit figure for the first 3 months. So I believe that the recovery can happen only after mid-October. So till that time it will be volatile, and it will be more of individual stock story rather than any sector. But still some themes can play out, something like mid-sized IT company. I do believe that the consolidation we saw in the mid-sized IT company would continue. Similarly, the second theme we are playing out is old private sector banking theme. This old private banking sector has seen a lot of consolidation in the last 20 years. Now the time has come for them to play out again. So apart from these two themes, we just go for stock specific, and we put 50% of money in the large cap stocks, because I am still a little nervous about small cap and mid cap space.
All right then. And Rahul, coming back to you, what are the top stocks that you may have on your radar that you'd like to recommend to our viewers?
See, one of the stock is in pharma sector. I am liking Sun Pharma. If you look at the last 2 years chart, it has corrected from the levels of 1200, and it has just made a bottom, a short term bottom around 432 odd levels. That is a correction of 64% from its lifetime high. On the daily charts, the stock is had made a flag pattern formation, and stock is on the verge of a breakout. I feel that stock can give a decent return in a short period of time. Hence, traders can buy at current levels, that is almost around 485, and on corrections to 475. The short term target is 520, and one should place a stop loss below 467. My second buy call is in Maruti. The stock has been under pressure in the last 3 to 4 weeks, and on the lower degree charts it is oversold, and some sort of positive divergence is also seen. I feel Maruti can rally from the current levels, and for short term traders, one can buy at current levels with a stop loss below 74.77 on the downside, and the positional target is 79.20 on the upside. Both the calls are for short term period of time.
All right. So from a short term view, you'd like to recommend Sun Pharma as well as Maruti Suzuki. Mr. Chokkalingam, what would be the stocks that you would like to recommend?
I would suggest Sutlej Textiles and L&T Infotech. I am pretty confident on the quality of these two stocks. Sutlej comes from one of the Birla Group companies, and the company has announced proposed splitting the shares, and as and when it happens, I see some scope for improvement in liquidity and also valuation multiple. But if you look at the company, since incorporation, it has been paying dividend, it has got a decent balance sheet. The last 4 years, its gross block has gone up by little more than 100%. It has been continuously expanding and modernizing. In fact, more than 60% of the spindle capacity, they are all less than 10-year-old, so which is quite rare in the textile industry. And it has got engaged into, diversified into home textiles. Right now, the home textile accounts for only 5% of the total turnover, but the management has indicated in next few years targeting around 25%. So that also can improve the valuation multiple for the company. And in Q2, that is in the current quarter, it is expected to stabilize its expansion facility in Rajasthan, and next year it is expected to commission another facility in Himachal Pradesh. And as I mentioned, its capacity has gone up by more than 100% 4 years. All this capacity expansion would augur well for improving the revenues, and it exports its products to 60 countries. Exports account for 27% of the total turnover. And lastly, it is engaged in highly value added yarn and fibers, synthetic textiles. So I see a lot of opportunity for making money in the next 2 to 3 years in Sutlej Textiles. The second idea is L&T Infotech. I have been playing on the mid-sized IT as a theme for last 3 years, and we have already seen companies like Exaver, Polaris, a couple of more companies are being taken over, and I believe that this consolidation would continue because the large IT companies are not able to grow their revenue even in rupee term in double digit. They are growing the revenues also in a poor single digit, and that would mean there is scope for more consolidation. And if you look at L&T has been divesting a lot of its assets and focusing more on the core business. So when you combine these two trends, there is a possibility of further consolidation, which can improve the valuation multiple for company like L&T Infotech, which is trading at a very attractive valuation of around 10 PE on 1 year forward earning. Like any other IT company, it's got a strong balance sheet. So therefore, I would strongly recommend L&T Infotech.
All right. That's what the recommendations are that are coming in from our experts. And with that, I'd like to thank the both of you for joining us and giving us your top picks. And with that, it's a wrap on this edition of Buy Now, Sell Now, the weekend edition. And we'll see you with your queries and portfolio next week.
Find us on Facebook at facebook.com/ETNow and don't forget to click the like button. You can also follow us on Twitter at ETNowLive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/ETNow.